Hello everyone, this is your quick stock market outlook for the week of February 27th. Each week I go through the same process. This is assessing how overall market conditions are setting up, and then that tells me if I want to buy individual stocks or not. You can see the recent stock watch list the stocks that I'm watching in these watch lists. And let's get to it. These are the major indices, each one looking at a slightly different area of the market. From a price action perspective, we can see we're in a pullback against the uptrend that has been going on for all of 2023. You can see we've had some other little hiccups along the way. This one a little bit bigger in the S&P than what we've seen so far this year. So we're starting to undercut a little bit of these small pullbacks. We're undercutting those a little bit. Overall, still making upward progress, but we're really at a point here where we could be in danger if we keep dropping of the potential scenario where in 2022 we were pretty much dropping all year. We've been starting to build from October against that bigger downtrend, but if we start heading lower, that's not a great sign. But at the moment, we're at least still making upward progress. So I'm not too worried about it yet. Just saying caution is a little bit warranted here. We can see the NYSE just undercutting its prior low here. So this would really be a point where I'd want to see the market go higher. So I haven't totally cut off buying yet. If I really find a trade setup I like, my trade setups always require the price moving up. We have like a recent high or a consolidation that the price has to move up through, and I want to see that, or even above like a prior day high or something. The price has to be moving up for me to get triggered in. So if we keep dropping on the indices next week, it's very rare that I would get triggered into a trade in an individual stock. So that's a natural defense mechanism. And so if we start moving up next week, then overall price action wise, that would be okay. We start moving up again. Maybe we continue this overall uptrend. So I would consider deploying a little bit of capital, but being very cautious here at the moment just because we are dropping. And until we start moving up, that's not great. In terms of the market health indicators, they've also deteriorated a bit. We have this is how many stocks are above their 50-day moving average. 43% of S&P 500 stocks are above their 50-day, so below 50%. That's not ideal. Less than half of S&P 500 stocks are in a short-term uptrend. The 50-day moving average is a very crude measure of a trend, but it is a decent indication of how many stocks are moving up overall. And 52%, it's a little cut off, you can see it over here, 52% of all US stocks are above their 50-day moving average. So again, like right kind of on that cusp of half of stocks, it's generally going to be much easier to make money when most stocks are above their 50-day moving average and moving up. So this period here was quite good as we started moving up out of this little rounded bottom, and we had a month of trending behavior, which was very good for some trades that were on the watch list. Volume, not super important right now. We did have a 2% drop a few days ago. Those are a warning sign. Anytime I see them, it usually just indicates that we're either going to keep dropping or we end up moving sideways for at least a period. So once we have a 2% drop, by taking a few days off, we almost never miss anything, and it gives the market time to breathe, and then we get to see, okay, are we going to start to recover? So from a price action perspective, going back to what we were talking about before, it'd be nice to see the S&P 500 regain at least this 2% drop and start moving up from there. This is the NYSE advanced decline line, how many stocks are advancing versus declining daily, and then it's a cumulative number. And you can see we're just kind of moving sideways since February. While the market's been dropping, it's holding up pretty well compared to the S&P. So this one I still gave a thumbs up because we haven't really started to make any major lower lows. We're not trending lower on it. We're just kind of going sideways. This is up volume versus total volume. No important signals recently. I look for either 90% upside volume or only 10% upside volume, or thought of another way, 90% downside volume. So that just shows massive amounts of the volume that was coming in was either going into stocks moving up or stocks moving down, and you can see we're kind of in between these levels I've drawn in, the 90 and the 10. We've just been hanging out in there, so no key levels on that. So not great. We have one that's moving sideways. We have one that gave us a signal to stay out for at least a little bit, and then we have about 50% of stocks above, 50% below. So it's not great conditions. It's not horrible, but if we keep deteriorating, these are of course going to deteriorate quickly. But if we start moving up, these are going to recover quickly. So we're right on that cusp, which warrants some caution. But if we start moving up, or if you have some signals, some trade setups that you're really interested in, and the price is moving up in those stocks, and we start to see buying in the indices during the week, then maybe we consider deploying a bit of that capital. Sectors on the move, pretty much a sea of red recently. Overall, I still like the consumer cyclicals, communication, these ones here. Communication, technology, real estate, industrials, financials. Industrials and financials held up the best of these sectors last week in the selling. You can see consumer cyclicals way at the bottom, communication services way at the bottom, technology, real estate all right at the bottom. So they were strong coming into last week, and then they got sold off the most. And industrials and financials held up the best. Over the last month, these are still your top performers, so we may be seeing a shift where some other sectors start acting better and others, go back to their prior ways. Technology was really weak last year. I'm not predicting what's going to happen going forward. I'm just saying what's happening now, and we're starting to see these roll over a little bit to the downside. 1 week, I'm not going to worry about it too much, but if we start to see this again next week, that's going to affect the monthly performance, the 3-month performance, and these sectors are going to start moving down the list, and we always want to be looking at the sectors which are performing well, especially on the 1 month and 3 month, and ideally over the last week too. So that would be your industrials and financials doing the best at the moment. And these other ones are ones to keep on the radar if they start to rebound quickly. If they don't, then we would not be as interested in them. So what I'm doing right now, I'll selectively add positions. We're right on the cusp. We're not bad. We're not good. We're at that point where it could deteriorate quickly or it could get better. So I will, if I see a setup I really like on my watch list, and it triggers, which means that stock has to be moving up, which is probably only going to happen if the indices are also moving up, I may take it. But in terms of my overall capital, I don't want to be deploying very much at the moment. I prefer deploying capital when the conditions are better and we start to recover a little bit. That's when I'll look at deploying more. Swing trading, there's always this kind of off period, on period, off period, on period, as conditions go from bad to good. So that's why I also like day trading. So I will be day trading stocks, the Euro USD. If you're interested in checking that out, you can check out the links here for how I day trade stocks and Forex. So I hope you have a good week out there. We'll probably get to see early in the week whether we continue lower on these indices and this pullback continues, or if we start to turn higher. That's what I'm hoping for. But again, these videos are not a prediction about what the market's going to do. I trade based on what it's doing now, and then I deploy capital based on that. So we're right on the cusp, which means I don't really want to be deploying too much capital. If we start to improve, I'm going to deploy more. If we get worse, I won't be deploying any. Have a great week out there.